2025 is not done surprising us yet, and I think it's going to be an insanely good year for the markets when all this tariff fear blows over. I know it doesn't seem that way with all the doom and gloom happening around us recently. I think that's a short-term thing. Things are kind of lining up perfectly right now. A lot of tailwinds. Okay, so this could just be a pit stop, a bear trap, whatever the hell you want to call it, before the big boom in the markets. Stick with me until the end as we discuss how our crypto bags may yet experience at least one more ridiculous pump. And I know what some of you guys are thinking. Lark, shut the fuck up. What are you smoking, dude? Like, this is bullshit. Obviously, it's a perfect bear market and everything's going to go down for years on end. No new highs for 4 years. We've just missed selling top. Trump's tariffs are going to crash the global economy down to zero. It's going to be the new Great Depression. Get over it. Pack it up, go home. First of all, I'm not smoking anything. Don't do that, guys. Second, I'm not the only one who thinks that good things are lining up for the markets. Take, for example, Cathie Woods, legendary investor, CEO of ARK Invest. She said that the market today is really discounting the last leg of a rolling recession. I mean, realistically, we've been in a recession since 2022. Biden caused a recession. We've been in a recession since 2022. They changed the definition of recession, so it didn't happen under his regime, but, you know, it is what it is. Now, all this gives Trump and the Fed, of course, many more degrees of freedom, which in turn is setting up the economy for a deflationary boom. Okay, I know we have to back up a bit, and there's a lot of stuff to unpack here. You might be asking yourself, Lark, what the heck's a rolling recession anyway? In simple terms, it's an economic downturn that affects specific sectors at different times, rather than a widespread slowdown across the entire economy. If you think about it, that's the reason why some industries feel like they've been stuck in the mud while others are flying high. The good news here is, of course, that the deflationary boom that she's talking about is projected to happen in the second half of 2025. And the theory, she didn't talk about this, but the theory that we could actually see markets boom well into 2026 with global M2 money supply following along, it's not that crazy, actually, especially if we consider the 4-year cycle might be broken. But why is Cathie being bullish despite the lackluster market sentiment? Well, one of the reasons is tax cuts. There are several proposals at the moment, including no taxes on tips, no taxes on overtime pay, no taxes on Social Security, no income tax for people earning under $150,000 a year. Big proposals. These proposals together could eliminate $4.5 trillion from the tax man's collectibles in the next 10 years and put that back in your pocket, which means regular people have money to ape into dog coins. Trump is proposing tariffs that are enough to fill the gaps. Whether that's a good idea or not, of course, history will tell us. However, less income tax means more money in the hands of consumers, way outweighs any potential inflationary effect from tariffs, which, of course, in turn could be used for people to save, spend, or invest in dog coins. Money spent and invested, nothing else to invest in, just dog coins, by the way. All this has a positive feedback loop on the economy. People start buying real estate again, houses, cars, blah, 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 right? Now, Trump signed the Tax Cuts and Jobs Act in 2017, or the TCJA, which reduced tax rates for corporations and individuals, and it seemed to work. The 2018 GDP rose to 2.9% from 2.4% in 2017. Now, 2018 was a bad year for crypto, but actually a good year for stocks. Now, according to the White House, this all repatriated $1 trillion in past overseas earnings that were previously invested abroad. In 2018, investments were 4.5% higher than projections, what was 3.3% higher in 2019. Now, would Trump's second term and expanded tax cuts have a similar effect? Some are saying it's going to be an absolute disaster. Everything's going to go to zero. Doom and gloom. Tear your hair out, gnash teeth. Less tax will translate to more economic activity by spending and investing, which will lead to more economic expansion, and our crypto will probably be in the backseat tagging along for all of this expansionary fun. At least that's what we hope for. Now, before we get into the rest of the details, why I think 2025's got a lot of fuel left in the tank once we get past this temporary scare in the markets, I'd like to thank today's sponsor, Kernel DAO. Now, this is a restaking powerhouse. The guys over at Kernel are letting you put your assets to work to earn some very insane rewards. Kernel has over $2 billion total value locked across their two main products, Kelp for Ethereum staking and Kernel for BNB staking. Backed by big players like Binance, you know they're not messing around. So you can restake your BNB to earn BNB pool rewards on Kernel and restake your ETH on Kelp to earn yield and points. Pretty cool. And if you're holding the Kernel token, then you'll have even more money coming your way because there's a lot of airdrops that are confirmed already. We have Mira, which is an AI coprocessor. We have YieldNest, which is a liquid restaking protocol. They've allocated about 1% to 2% of their token supply to kernel token holders. Pretty damn cool. Now, if you want to learn more about what they're doing, find out ways that you can stake your Ethereum with them, your BNB, or earn some airdrops from kernel, well, there's a link down below where you can learn more and start putting your assets to work, earning you some passive yield today, which honestly is not a bad option to do considering current market conditions. So if you're waiting out the storm to blow over, may as well earn some passive income while you're at it. Go check it out. Link down below. Thank you for supporting our sponsors. So another potential catalyst for an unpredictable 2025, of course, is the prospect of lower interest rates. Now, we've discussed this many a time before, but lower rates make borrowing cheaper, freeing up capital for business expansion, for investments in risky assets, and also, very, very importantly, allows for people to start dipping their toes into property again, buying houses, unlocking the frozen property markets, because property markets are in a bit of a state right now, but that could change very quickly with a couple interest rate cuts. Trump himself has stated interest rates should be lowered, something which would go hand in hand with upcoming tariffs. The Fed, of course, always resistant, always slow to act. Fucking Fed, man. Anyway, here's the catch. The United States president does not have the direct authority over the Federal Reserve. So Trump's been doing everything he can to try to get those long-term bonds down, and it's been working by cooling off different things in the economy. But the Fed isn't budging on official interest rate cuts yet. The independent body solely responsible for setting interest rates is taking their damn time about it. They want to wait and see. The Fed is always behind the curve. Well, this at first might seem a bit counterintuitive. It is also a critical part of the checks and balances designed to keep monetary policy free from political influence. But they have their own ideas and their own political ideologies over the Fed, so there's that too. Now, how could Trump influence a rate cut? Short answer is that he's likely to apply indirect pressure on the Fed. The long answer, of course, is that speculation currently suggests that Trump might actually be stirring up some economic uncertainty, a little bit of shit there, putting a little bit of shit in the economy there, through actions like his tariff announcements to spook markets, to get people buying bonds again, to push them back into the safety of bonds, to push the yields back down, or other market disrupting policies, all again with the intention of cooling off the bond markets. Falling bond yields could in turn strengthen the case for the Fed to cut rates. Trump's also pushing very heavy on getting oil prices down, which has been very successful in doing so far, which is going to bring inflation down, which is going to make it more likely for the Fed to cut. All this aligning with Trump's preference for cheaper credit and more, of course, than investment in the economy and economic activity, et cetera, et cetera, et cetera. They got to get the credit markets to be cheaper. So this uncertainty in the market is supposedly all part of the plan. Well, this strategy does remain a bit speculative. It's worth noting that during the early months of his presidency, Donald Trump actually demonstrated quite the knack for getting his way. Basically just alpha mogs everybody all the time on everything that he wants to do. You know, sometimes it even means art. Have you seen this dude shake hands with like Emmanuel Macron? It's just like a wrestling competition of your time, like complete physical like dominance. Anyway, different story. It's hilarious, though. Anyway, at the moment, the bettors over there on Polymarket are betting 100% that the Fed will completely end quantitative tightening by May. Now, we just had an 80% reduction in quantitative tightening for Treasury bonds. Mortgage-backed securities haven't been touched, but 100% current speculation that we'll have a complete end to QT in May. Do you know what goes hand in hand with lower interest rates? A weaker dollar, by the way. Here's how it might play out. When the Fed cuts rates, it makes U.S. borrowing cheaper, but it also makes holding U.S. dollars a lot less attractive for a lot of people in the global investor community. Of course, compared to other currencies, for example, with higher returns. Now, all that then pushes the dollar's value down, which again is something that Trump wants. Trump wants a weaker dollar because it puts them in a better position for negotiating, doing business, and all that kind of stuff. DXY, the dollar currency index, is currently dropping. It's been dropping for a while now. It's likely to go a lot lower because that's what Trump wants. And a weaker dollar means U.S. stocks and crypto look like better deals to both local and foreign investors in that situation, then boosting demand and prices. Plus, all of this makes United States exports cheaper, and it makes them more attractive to overseas buyers, which in return, of course, can then lead to a manufacturing boom domestically in the United States, which is exactly what Donald Trump is pushing for, with trying to get companies to bring their factories back into America to create more high-paying jobs for Americans. Now, look, I think sometimes all this stuff can be a bit scary, right? Donald Trump's got his plans for better or worse. We'll see how they work out. Another factor we've tackled several times here, of course, too, is the global M2 money supply. We've talked about this a lot, and I think it's worth continuing to talk about because it is one of the most important signals in the markets, because it's the money in, the money out, the rising tide that lifts all boats, or the lowering tide that sucks out all liquidity and just sends your dog coins to zero. Now, Real Vision founder Raoul Pal, friend of the show, said that crypto is feeling the tightening in liquidity from the stronger dollar and higher rates in Q4 2024. We talked about this back then and how a correction was a likely scenario for Bitcoin in the start of the year due to the M2 supply going down. There's a correcting back then. We have about a 3-month lag behind it. All this could just be a regular correction in markets. Financial conditions will improve, them too heading back to new highs. Probably by the end of April, we'll see markets catching up in a significant way. Between now and then, you just need to survive. As you know, greater liquidity means more money for risk assets. By the way, the M2 is actually breaking out to new highs right now. So it's pumping pretty good. Of course, higher M2 doesn't make us moon overnight. Again, it could be months before it's actually felt in markets. It usually has about a 3-month lag, which again puts us around the end of, let's say, April or so. It could start in the next week or two. It's not an exact science. Sometimes it correlates shorter, longer, but it's coming, okay? The rising tide will lift all boats. So all this kind of comes nicely with the crypto community's expectation that we have at least one more pump left in this bull market. If Trump, of course, doesn't usher in the ultimate golden era of all crypto, and we just pump for years on end for the ultimate .com style bubble boom. It'd be good, wouldn't it? Look, I know the initial guidelines for the Bitcoin Strategic Reserve do not get people super excited, okay? We're expecting America to come in like all like American style, like, yeah, freedom, man, go buy all the Bitcoin, man, let's go. But instead, it's just kind of like, we're going to keep the Bitcoin that we've already kind of got from criminal actions and stuff like that. But they are going to be introducing all kinds of bills in different ways to actually buy Bitcoin. They're going to do it, guys. It's only a question of when. Look, guys, I know the guidelines for the Bitcoin Strategic Reserve failed to impress initially. People were expecting like, America, yeah, come in and buy all the Bitcoin, man. It's not exactly what happened. Like, just market buy a million Bitcoin. It doesn't really work like that, okay? So far, we're seeing that they're going to keep the Bitcoin they have seized from Silk Road and stuff like that, which is a bit of a cold shower for people who are expecting this immediate mega supermarket buy. But Bitcoin reserve bills are being launched. The economic advisors from Trump are saying, yes, we're going to buy Bitcoin. Howard Lutnick, the Commerce Secretary, has been tasked with ways to make budget-neutral purchases. For the first time, a U.S. president thinks that the U.S. should be the crypto capital of the world and that they should buy shit tons of Bitcoin. This is real. It's happening. Guys, WTF. Now, aside from the executive order, Congress has been working on the Bitcoin Act of 2024, proposing that the U.S. acquire 1 million Bitcoin over the next 5 years, read by Senator Cynthia Lummis. Several states have their own Bitcoin reserve proposals at various stages of acceptance: Texas, Arizona, Florida, Ohio. I think Utah's is passed or almost passed. A lot of stuff going on. For the first time, cabinet posts are filled with officials who own crypto: RFK Jr., Tulsi Gabbard, Pete Hesketh, Sean Duffy, J.D. Vance, man. All these people are Bitcoin people. Treasury Secretary Scott Bessent is pro-crypto. Howard Lutnick's like a hardcore Bitcoin bull, okay? Over at the SEC, we now got rid of Gary Goldman Gensler over there, and now we have the super pro-crypto Mark Uyeda, who's going to bring in altcoin ETFs. So if you look closely, you would agree that maybe this is all just a correction in the market. It's just a bit of a liquidity suck as the M2 goes down, a bit of fear comes in the market, people start freaking out. But there are dozens more reasons, like what Kathy Wood is pointing out, that disruptive innovation, especially in AI and robotics, could further grow the markets. And in case you haven't heard, OPEC is set to increase oil production in April, which of course will hammer down inflation even more as oil prices fall even further. Now, if Trump gets his way, we'll probably see an end of the Ukraine war as well soon, which hopefully the markets will like. That alone could see a bit of enthusiasm come back in the markets, a little bit less World War III doomer vibes. The Europeans are like, let's have World War III. Everyone else is like, shut the fuck up. We don't want that. No, look, these are the reasons why I believe that we have not seen the peak of the market yet. Maybe it's all just opium, okay? I'm totally wrong. Everything's going to go down to zero and c'est la vie. Got to go start an e-com business, man. There's a lot of possibilities for good things. Tax cuts, lower rates, weaker dollar, rising money liquidity, cheaper oil, pro-crypto US, and a dozen other things, to be honest. It's all lining up here for us, not just for crypto, but really for all risk assets. And I've seen a lot of cycles, and so far this is one of the most favorable climates that we've had in spite of this recent price correction, in spite of the way the charts look right now. I know, I'm looking at the damn charts, okay? But short-term pain is probably going to lead to some long-term insane gains. Okay, so survive, keep locked in, keep looking for opportunities. You're going to make it. Thanks for watching.